floor is open for comments, questions, and alternative views on anything that Jerry mentioned. Anders, please identify yourself and then fire away.
Anders Åslund, Peterson Institute. Thank you for a very stimulating talk. And just to get the ball rolling, I see two things that I don't believe in of what you have said. One is natural resources. I believe much more in the resource curse. And that touches upon your other point about state corporations. Dealing with Russia, I have a rather low view of state corporations. Yeah. State corporations amounts, to my mind, to corruption. And looking upon the former Soviet Union, it seems to me that the big curse is corruption. And that's connected with the two resource curse and the state corporation. So I would like to challenge you a little bit on this point, if you would like to modify your thesis in any regard. Thank you.
Yeah, thank you. In terms of natural resources, yeah, the longer-term trend has been for the marginal cost of all commodities to go down in price. And the big question in the last few years was, will China and India change that by their sheer scale? Most worrying data I saw was from one of our clients, not giving any client confidentiality away, but one of the commodity companies who a year ago, actually it was the OECD he presented, actually I think it was now, that China and India are, relative to all countries that have industrialized, still in the early stage before takeoff. They haven't actually reached the takeoff stage, which argues very worryingly about both resources and about the environment more generally. But as I touched on, I think the positive is that the response is that it's not just likely to be a price response. Quantity, as I said, in technology. I think we're now starting to see more investment in technology, and who knows where that will go. But certainly on the price, if it was a price alone, then I would say that we're past, it's not peak oil, but peak cheap oil might be where one would call it. Although $150 seemed too high. The big challenge for the West is that if economies remain weak, then if we did have a continued recovery in China that drove commodity prices higher, and if the dollar weakened further and speculative money went into asset markets, then the big challenge for the Fed and for the Bank of England and G7 central bankers is the need for an accommodating monetary policy occurring at a time when commodity prices are going up. But in answer to your question, yeah, look, there is a big issue. I think the bigger challenge is water. We did a big report earlier this year, the real liquidity crisis, water. And at first you can really worry yourself. But what's positive is that wherever you have had water problems in the past, they've tended to lead to cooperation, not confrontation. Of course, that could change. Finally, your point about state, well, Ted Truman and I both testified at the same time, and we were talking about sovereign wealth funds. And the worry about the state is that they don't always play by the same rules, and it might be strategic, not competitive. And therefore, Ted Truman has a particular, you were talking about the need for more openness and transparency, particularly in terms of sovereign wealth funds. But yeah, look, I don't disagree with what you said in terms of how Russia has behaved to date, but the question is forcing more openness, more transparency, and basically the West needs to have checks and balances in place. But corruption, yeah. But maybe the point, Indonesia, I would say a decade ago, if you wanted to pick a corrupt country, you could have picked Nigeria and Indonesia. Indonesia is not corrupt in any way, shape or form. Well, it's probably still has some, but it's moved far more than anyone could have imagined. So change is possible.
Okay, who's next? Yes, right here. You can either go to the microphone back there or get the traveling mic.
Thank you so much. I'm Toshi Ogata with the Asahi Shimbun, a Japanese newspaper. I just want to ask more about the currency issue. You mentioned that there has been we are beginning to see the shift in power when it comes to economic power to Asia. So what kind of image do you have when it comes to the in 10 years, 20 years, what kind of change will be made in the international currency system? And you mentioned that you are seeing the shift in currency policy among the countries. So what kind of cooperation should be made to have maybe a smooth transition, and in which institution do you have in mind, like a G20, G2, or G8?
Yeah, well, now we've got to G20. Let's try and make G20 work, although there's already grumblings about who should be in G20 and whether Argentina should be there. Prime Minister Brown got round this by inviting 29 people when we had the London summit. I think 29 people were invited to Pittsburgh as well. So maybe we need to have something on that. But at the end of the day, you want things to work. The Financial Stability Board, or what's the Financial Stability Forum, I'm not sure which it's called now, has expanded as well. So I think we need to see some quick wins for people to have confidence in it. On the currency issue, maybe the most intriguing aspect of the Chinese questioning the dollar is that the Chinese didn't put forward their own currency. Now, you could say that's because they don't want it to appreciate, they don't want pressure on becoming more convertible. They talked about a multilateral currency system. But if you give people a choice between gold and dollars, some people will go for gold, some people will go for dollars. If you give the general public a choice between gold and SDRs, everyone, I think, will go for gold. So credibility is an issue. Britain was once the world's biggest or most important economy, but long after it stopped being, sterling was still the most important currency. So it takes a long time for a currency to lose its status, and you do need to see alternatives. But I do think if you see trade corridors changing, you will see more countries starting to move to hold more euros, more CNY eventually. Maybe not yen, but sterling to a small extent. So it's difficult to say what will replace it. The IMF, if the European voting rights are reduced and Europe is forced to act as one country, then Europe should think about the IMF's moving its headquarters to Europe. But that's a different issue.
Jerry, you're a market economist. Let me ask you a follow-up question to that. It's a little bit hobby horse of mine, but I think it has general interest. One thing Zhou Xiaochuan did propose in his famous paper about the currency system last spring was a substitution account, opening up an account in the IMF where the Chinese or others could put their dollars for SDRs off-market and therefore not disrupt the exchange markets in a direct sense. Question is, suppose that happened, what would be the market effect? Would the market think, that's a good thing for the dollar because unwanted dollars are being cleared out of the system? Or would it be read as an attack on the dollar, which would have negative implications in the markets, even though the transactions themselves were done off-market?
I don't know is the answer, but if of the choices you gave me, I would go for the latter. I think the market would see it as a further sign of the undermining of the dollar, but they would see it as a sign that you can't keep on doing this passively. You need to start seeing others, the Europeans, being accepting of a stronger currency. But in particular, it comes down to Asia, actually, at the end of the day. Because the shock absorber, if the dollar keeps weakening, are currencies that at the moment can handle it, but eventually can't handle it. If the euro keeps strengthening, then the EU or the euro project won't be threatened, but some countries will seriously have to think about leaving it. But I think it comes out, but the Chinese work on a very slow process. There are some people in China who don't think the currency should appreciate at all, and they think exporters and job creation is the key. But in answer to your question, I think the market would, it's not clear cut is the answer, but of the choices you gave me, I think the market would take it negatively.
Okay. Yeah.
Gerald, Patrick Malloy. I'm with the U.S.-China Economic and Security Review Commission. Okay. You and I testified with Ted at that hearing on sovereign wealth funds. I have two observations. One, you made the point that economic and financial power, and then you implied also political power, is moving to Asia. You didn't talk about military power. My own view is you don't move economic and financial and political without military eventually following. And the Chinese do talk about building their comprehensive national power, which military is included in that. The second observation, well, I guess the comment, you made the comment that China will hold off raising its interest rates for geopolitical reasons. And I just thought it would be helpful if you would expand on what you meant by that.
Yeah, okay. Actually, in the first part, I'm not sure about the longer-term political ambitions, but it seems natural that China will build up its political military capability. I think it doesn't have an aircraft carrier, if I'm correct. It's probably the only major nation is building one. Yeah, but so much of its spending goes on paying the wages and the infrastructure. Yeah, I think in terms of interest rate policy, it's a difficult one. The central bank, in my view, wants to tighten policy, but the central bank doesn't call the shots in China. Wen Jiabao and the State Council are worried about jobs and exports. So for domestic reasons, I don't think they are as keen to tighten policy. But I think in the global economy, leading on to a question asked directly, I think China needs to be seen to be pulling its weight. And China therefore needs what China can offer for the world rebalancing without changing things like convertibility and other issues, which are complicated issues. Its offer is to actually continue to be growing its domestic economy.
Nick Lardy, Peterson Institute. Jerry, you mentioned that the main lesson the Asians were taking away from this crisis was that their massive buildup of reserves had allowed them to ride out the financial part of the crisis.
Yeah.
And that, of course, implies that they're going to be less likely to want to move in the direction that you recommended, which is to generate more domestic growth. But I would have thought the main lesson was that their regulatory systems allowed them to ride out the crisis, that their banks did not have the toxic financial assets, that they didn't have the massive write-offs, the governments didn't have to inject capital, guarantee liabilities, and so forth. So is it really so purely they thought reserves saved them? Their regulatory systems get no credit at all? And if you really believe that, then why would they do anything other than continue to pile up more reserves?
No, fair enough. Yeah, actually, the IMF's Financial Stability Report noted that Asian banks have probably written down $166 billion in this crisis. That was an implied loss rate of about 2.1% of assets. And that compared with maybe over 8% in the States and over 7% in Britain and maybe about 3.6% in Europe. So in terms of the hit they've taken, it's not too bad. In fact, when you look at the crisis, there are a number of countries around the world that did well in this crisis. Canada and Australia in the Western world. Across Asia in particular, you would say that it would be India, China, even Hong Kong, actually. You go to Hong Kong, Macau, etc., not Hong Kong, but that region, they tend to be gamblers beyond belief. But they had loan-to-deposit ratios on properties, so you had to have skin in the game of 25% in terms of the real estate market. And that held Hong Kong in quite well. One of the things, certainly when you talk to some central bankers in Europe, they eye is not just the regulatory environment, but the reserve ratios that the Chinese and the Indians had. But also the Chinese had, it wasn't only their, Lu Mingkang has done a great job in China, but moral suasion is a particularly big issue. It used to be called the nod and the wink or the governor's eyebrow in the UK. And we used to use this 20-odd years ago. This week, Lu Mingkang has, I think, visited all the banks that lent more than 40% or increased their lending more than 40% in China this year. So it's more than that. So in answer to your question, was the regulatory framework important? Yes. Does that pose a challenge? Yeah, it means that they will be less reluctant to maybe change. I think what it implies is that for Asia to move to deepening and broadening its capital markets is a slow process, and they need to be convinced of the need for it. But as the middle class grows, and as you need to look to small, medium-sized firms to have access to funds, then I think they will try and still have a regulatory framework that minimise downside risk, but I still think they would have to open up their markets. But in answer to your question, yeah, the regulatory policy did play a part within this.
Okay, who's next? Jacob.
Jacob Kierkegaard from the Peterson Institute. Thank you very much for a set of very interesting remarks, and it's always very stimulating for someone to go on the record or listen to someone who goes on the record on a 30 to 40 year time horizon. But for someone who does that, I thought maybe you did give the issue of, I mean, you mentioned that the environment, you could talk about it for the entire day, which I would agree with. And I was wondering if I couldn't ask you to chase out a little bit how you think the issue of climate change crisis, that's a 3 C's you forgot there, the climate change and crisis, is going to play out, because I was quite struck by your seemingly very bullish remarks on particularly South Asia and Africa, where I think it's fair to say that the scientific consensus seems to be that those are precisely the areas in which the adverse economic effects, particularly on agriculture, is going to be felt over the coming 2 decades.
Yeah. I'm on something called the Grantham Board in the UK, and the 2 guys who run it are Nick Stern and Brian Hopkins, and they've probably forgotten more about the environment than I know about it and climate change. So basically, I'm not even going to sort of say that I'm going to answer the question as it should be answered, but I'll give you my response to it. It's a big challenge. There's no doubt about that. But in terms of the environment, I think it's risk versus return is why I think we should take the environmental challenge seriously. The issues against the environmental worries is that predicting current weather systems is inherently unstable. And the other point to bear in mind is we don't know what the norm should be. The fact that we're changing from something to something else doesn't imply that where we've come from was where we should have been anyway. So these factors, I think, are valid points in the whole debate. Having said that, I tend to look at it risk versus return. And the small probability, high impact event, or Nick Stern will call it high probability, high impact event, does suggest that we take it seriously. I think we all know the issues. But as I was saying, you need to price things differently. Certainly water needs to be priced differently. You need to limit use of it, maybe, which feeds into the price mechanism. But I do come back to technological change. I think we will see more investment in areas. Across Africa, these countries in many parts of Africa, rich in commodities, resources, have suffered a lack of investment. But the thing that I would really agree with you on is the whole water issue. But in the Middle East, we've shown that there's technological solutions to some of these issues. I think we just need to spend a lot more money, a lot more time addressing it, and you need to start sending incentives by taxing things that you don't want people to do.
Jerry, you covered, Bob, go ahead.
I had a question as to...
Identify.
Bob Davis with the Wall Street Journal. You talked a little bit about this, and I came in a little late, so you might have addressed it. But the question I have is whether you think the policies that mostly the wealthy countries are following in terms of low interest rates to try to nurse the global system back to health are producing asset bubbles in Asia. If that's the case, where and how big a problem do you think this is?
Yeah, I touched on it indirectly in saying that there is a big challenge for monetary policy across Asia in the sense that if you don't raise interest rates, you're getting asset price bubbles, and if you do raise interest rates, you risk attracting short-term inflows. The fact that Israel, albeit not a major player, raised rates for domestic reasons, that went off okay. Australia has not only hiked, but has given the indication it's going to hike imminently again. And my feeling is more countries will start to change policy. At the end of the day, on monetary policy, the lesson is that you set monetary policy to suit domestic needs. And when you set monetary policy to be tied to an exchange rate policy, then that can create problems, as Japan showed us to a classic extent in the mid to late 80s. So I think Indonesia will hike. India, last week, their monetary policy statement quite clearly indicated that they would hike. South Korea seemed to, a month or so ago, be hawkish and has eased off. They might hike in the first quarter of next year, in our view. China, I was saying, big debate, but the point is that if you're an export-orientated country, one of the issues that is raised is whether they can or will be able to hike rates before America. I think... certainly when one looks in the West, I don't think, my view if one looks at the States is I don't see the Fed being able to hike rates anytime soon. I think Mark Carney at Bank of Canada, when he ruled out hiking until the end of Q2, set the trend for the G7. I think the Fed will not be, my personal opinion is they can't really hike until unemployment is clearly trending down. And unfortunately, unemployment may still be going up even through a strong recovery into the first half next year. So our guess is no more than that, is there will be a Fed hike in the first quarter of 2011. I think it's possible that the Bank of England might not raise rates before 2013 if the new government seriously tightens fiscal policy. But chances are that they will feel that if it's a one-way bet, then they need to tweak things up just to keep the markets on edge. But I think we're in for a prolonged period of low policy rates in the West. And therefore Asia, given that backdrop, will have to start tightening policy. Now, I think one issue that will come to the fore next year is exchange controls. I think the way Brazil tightened policy last week made sense. An issue I'm asked about across Asia is how you deter short-term speculative inflows whilst at the same time encouraging long-term investment flows. And my answer is you can't. It's difficult. I don't necessarily believe in the Tobin tax. It sounds great in theory, but not in practice. But I think these are challenges. But Thailand and Malaysia in the last decade put on controls in place. Both were seen as not being successes. So the option across Asia at the moment is not to go down that route, but to try and rely on more conventional monetary policy.
What about asset bubbles?
Asset bubbles, yeah. Sorry, I think, yes, there are asset bubbles being built up. The big challenge is that the asset bubbles have been built up in the only two areas where people can put their money, in property prices and in real estate and in equities. And therefore, twofold. It implies that central banks need to try and prick those bubbles as painlessly as possible. And second, it implies that you need to deepen and broaden your capital markets so people have got more alternative areas in which to invest. That takes time. But in answer, there are asset bubbles in some countries.
Just as a follow-up, is there a particular areas or particular sectors or particular countries that you're worried about?
Well, this week, China, which is the country people would be worried about, they've taken very positive action. On Monday, they outlined 7 sectors where they saw potential problems, and they've asked for lending to those sectors to be curbed. And they've tried, by announcing the new fund for 20 industrial funds today, to try and direct more money to future growth areas that do not have those potential bottlenecks.
Yes.
Thank you. Li Zengxin from Caijing Magazine. This is about China's growth model. We know that to make China a more domestic demand-driven economy, you need at least 3 things: improvement of social security net, exchange rate regime change, and also a better, income distribution framework. For Justin Lin Yifu from the World Bank, he's saying that how much you need to spend to improve the social safety net to give every Chinese more than 100 yuan. And also he's saying exchange rate is not so big, make a big difference. He's saying that it's it's just like you said just now, Chinese households are spending a lot right now, but it's the companies, the corporates, and the states, they are saving too much. And this is the disparity in this income distribution. I'm wondering, for these 3 sectors, how do you prioritize them? And how do you think that the income distribution should change?
Yeah.
Thank you.
Thank you for the question. I always think that too many of the questions asked about China are too negative. China is just on a phenomenal growth path. We could have sat here 10 years ago and talked about all the negatives, and they would have been right, and it still grew. In 1994, people said lots of negative things about South Africa, and it's still growing. I tell you, you go to China, you go to Dalian and Shenyang in the northeast, and they've changed beyond belief. You go to Western and Central China, they're changing beyond belief. The number of people brought out of poverty in the last decade has been absolutely phenomenal. Now, 90 million people, the World Bank estimate, has gone back into poverty in the last year. That's a serious issue. But it has to be seen in the context of what's gone on before that. Wen Jiabao, the Chinese premier, a few years ago, talked about the 5 imbalances: urban, rural, coastal, inland, social, environmental, and international. Certainly, and in answer to your question, which I think is a very serious point about the social issues, last year and this year in the budgets, they announced increased spending on education and social welfare. But it's small increases, and naturally that needs to continue. But the last thing you want China to do with an aging population is to inherit what I think is a failed system in Western Europe. I'm from Western Europe. I look with horror at the future implications of the Western European nanny state model. It's just China needs to have a system that allows the state to have a social safety net, but I don't think you should go down an expensive route. What do we need? Private insurance? But these things take time. So, yeah, I think social safety net's important, but it's also vitally important the social safety net you have in place. Countries in Europe, some of them have done it much better than others, and the standard of living is phenomenally high, and we shouldn't knock it, but some of the longer-term costs would be very exorbitant if China went down that route.
Carlos Primo Braga, I'm the Director of Economic Policy and Debt at the World Bank. I enjoyed very much your presentation. I was reminded of an exchange between John Major and Mr. Yeltsin in the early 90s. John Major asked Mr. Yeltsin, one word, tell me what is the situation of the Russian economy, and Mr. Yeltsin said, good. John Major was struck by the response, this was the early 90s, and asked two words, and Yeltsin said, not good. So going back to your proposition that we are on a way to a super growth cycle, I share your optimism about the Chinese economy, but at the same time, as you pointed out in the beginning, it will depend a lot on what happens in the West, too.
Yeah.
So my question is, if you look at your good, bad, and ugly, let's focus for a moment in the ugly. So we know that it's almost inevitable that over the next 5 years you are going to see an increase in public debt in OECD countries of the order of magnitude of 40 percentage points of GDP. What are your expectations in terms of the impact for interest rates in the West and for growth in the West? And at the same time, do you have any concerns about rollover risks in terms of the corporate sector in certain areas of the West, but also in the East?
Yeah, thank you. Certainly I think we shouldn't underestimate the challenges in the near term, and we shouldn't be complacent about the near term, not only because of the bursting of the debt bubble, but because the West also has to adjust to some of the longer-term challenges as well as opportunities. The near-term cycle is one where we still have the debt overhang to be worked through for the personal sector. Consumer debt, well, America and Britain, same boat as this, but also corporate defaults and delinquencies. We're probably only halfway through the process, according to some people in the markets. So it will be a painful adjustment. So in that environment, I think short-term rates have to remain low. And the lesson from Japan is there needs to be no premature exit. Japan's bubble burst 1990, employment peaked 97, then Japan prematurely tightened fiscal policy. They then had their Lehman's moment, and they learned from that. They learned from that in two ways, because maybe as China and Asia need to learn now, the outcome depended on both a demand and a supply solution. You needed to force through change on the supply as well as on the demand side. But the other lesson was when Japan announced quantitative easing in 2001, they announced the exit strategy in the fall of 2003, I think it was, but only embarked upon it in 2006. So you need to have an exit strategy there to placate and keep the markets at ease, but you mustn't implement the exit strategy too early. I am not as worried as some of my colleagues about the increase in debt. People tell me that Britain should be downgraded. Some people from the rating agencies tell me Britain will be downgraded. I think that's manifest nonsense if they do. It'd be like when Japan was downgraded to the level of Botswana. UK debt is gone from about 40% to 80%. The budget deficit is high. I'll use the UK as an example. Yeah, one shouldn't be complacent about that, but 80% debt in the scheme of things is not a problem. I think governments are there to step in when needed. As I said, it was the good, the bad, and the ugly. The good is that they have done something. The bad is that they should have run it a surplus in the good times. I think out of this, we will both have central banks moving interest rates back to much higher levels in normal times, a government's trying to run surpluses in normal times. The ugly, I think, is not so much on the inflation, as some people fear. I think it's more on the tax side, and that limits your ability to compete in the globalized world. What's my worry? Maybe if we had a boom in Asia driven by domestic demand, which is what we all want, the unintended consequence of that is commodity price inflation going through the roof, with countries that have currency depreciations suddenly finding that short-term rates and long-term rates go up. But I think we will have a relatively prolonged period of interest rates staying low at the short and longer end. I think the longer end stays low as long as people have faith in the policymakers doing the right thing. And finally, the key word is growth. You need to get growth back to get deficits down.
In the back.
Yeah, Liu Hong with Xinhua News Agency of China. You talked about the currency issue and China's renminbi. Nowadays, the Western countries are pressing China to appreciate its currency. But as we all know that the appreciation of renminbi, especially the sharp appreciation, will hurt China's exports and bring serious unemployment, and eventually will hurt China's economic recovery. So my question is very simple. In your opinion, how should China do to respond to the pressure? Do you have some suggestions? And could you elaborate a little bit?
Yeah, well, China allowed its currency to appreciate after, was it July 05? And I think China should allow its currency to appreciate. Maybe gradualism pleases everyone because you're moving in the right direction, but you're doing it in the controlled way. So back to where you used to be, which was a controlled, gradual appreciation. Ideally, in theory, I'm of the view that you should have flexible exchange rates. But I can see why the adjustment phase is painful. But flexible exchange rates, ultimately is where you need to move to.
Jerry, final question perhaps. We had another acute observer of the Asian scene here earlier this week, in fact, a senior statesman from Asia, who suggested in very forceful terms that China is now absolutely, to use his term, trying to create an Asian bloc.
Yeah.
One of the few things you did not discuss in your remarks was regionalism. But you're in Asia all the time. You talk to the countries there. Do you think we're headed toward an Asian bloc? Do you think China wants to consolidate a regional grouping? And if so, do you think that's a good thing or a bad thing in terms of the increase in trade corridors, the globalization of the world economy that you obviously support?
Yeah. Certainly the regional bloc that I think will emerge in Asia is the ASEAN bloc, because I think the ASEAN countries have realized that individually they're, I won't say neglected or ignored, but maybe they don't punch with the same weight they feel they should do. So I think that's one that will emerge. China, we've seen China. India, we haven't spent maybe enough time talking on India. I think India is very important, and India's potential, I think, is every bit as great, if not greater, than China's, particularly if it gets its infrastructure and its regulatory environment correct. And India has a very good shock absorber democracy, which stood America very well during the Great Depression. So India is a phenomenal opportunity. 3 million elected representatives means it slows it down sometimes. But in terms of the regional bloc, China, the relations between China and Japan are important, and China and India are important. For China, in my view, to fully embrace Asia regionally like that, it's those sorts of relationships that need to be ironed out. Also China, US, the G2, how that plays out. But in answer to your question, yeah, I think there will be greater ties between Asia. I think China already has the dominant role without needing to take on the responsibility. So maybe it's happy that way. But of the blocks, I think a Southeast Asian bloc will emerge. I'm not yet convinced about a full Asian bloc. And I don't think we'll have an Asian single currency to conclude.
Okay, Jerry, obviously questions could go on all day. We thank you very much for coming, for giving us so much food for thought, and we'll look forward to seeing you frequently again. Thanks to all for coming. Meeting is adjourned.